Welcome to the Guardian Forex TV, your steadfast beacon in trading. I'm Simon Githiri Kamau. Here's your global market news for July 3, 2025. For Thursday, July 3, 2025. The first half of the year is over, and investors are bracing for what's next. In Asia, Japan's Nikkei rose on a weaker yen, while Chinese markets hesitated, awaiting stronger policy support from Beijing. Europe's major indices are flat, with traders eyeing the European Central Bank for clues on future rate cuts amid sticky inflation. Wall Street remains upbeat, led by tech stocks, but all eyes are on upcoming U.S. jobs data for signs of economic strength. The U.S. hopes for a soft landing, but optimism is fragile. Vietnam's VN Index stands out among emerging markets, drawing foreign capital thanks to robust growth in manufacturing. Still, global headwinds could impact Vietnam's export-driven economy. Investors everywhere are watching international developments closely. The stage is set for a volatile second half. In Forex, the US dollar is surging as the Fed signals higher rates for longer. The dollar index climbs, making the greenback attractive to global investors. The euro weakens as the ECB cuts rates and faces economic uncertainty. The interest rate gap between the US and Europe could push EUR/USD. Even lower commodity currencies like the Aussie and Canadian dollars struggle amid China concerns and oil price swings. The Bank of Japan's ultra-low rates keep the yen weak against the dollar. Key pairs to watch: EUR/USD, USD/JPY and GBP/USD, all moving on central bank policy shifts. A strong U.S. jobs report could further boost the dollar. Forex traders are bracing for volatility as central banks diverge. Policy decisions and economic data are driving sharp moves. Stay alert, opportunities and risks abound. Central banks are in focus this week. The Fed isn't expected to cut rates yet, but traders are searching for hints on timing. Every economic report, especially on inflation, is under the microscope. The ECB has started cutting, but faces a tough choice. Ease further or pause as inflation lingers in services. Their next move will shape market sentiment. July often brings a summer rally for U.S. stocks as lighter trading can amplify positive momentum. But this year investors are cautious, hedging bets ahead of the U.S. jobs report. A strong report could delay Fed cuts. A weak one could spark recession fears. Traders are using options to manage risk while hoping for continued gains. The market's next direction hinges on central bank signals and economic surprises. Oil prices remain volatile, caught between global demand worries and Middle East tensions. U.S. Treasury yields are rising, reflecting expectations for higher rates and impacting borrowing costs. Higher yields make bonds more attractive, sometimes weighing on stocks. The U.S. jobs report is the week's main event. Expect market swings in stocks, bonds, and currencies. The ECB's upcoming meeting and inflation data from both sides of the Atlantic will also be crucial. These events will test market resilience and shape central bank policy. Staying informed is key to navigating the volatility ahead. Thanks for joining this market update. Join the discussion and stay ahead of the curve.